So how many properties do you actually need as a real estate investor to become a millionaire? Now, I'm not talking about buy a new Lambo every single year kind of millionaire or buy a vacation home in 5 different locations kind of millionaire. I'm simply talking about having $1 million in net worth. And while the first kind of millionaire that I mentioned is well beyond where anyone will get, having $1 million in net worth is also not easy to acquire. So in this video, I'm going to use some examples of properties that I've purchased and how we can see over time how those properties increase in value and how those numbers break down to increase your net worth over time and how you can become a millionaire just by owning a couple dozen doors. So for the example in this video, I'm going to be using a 7-step deal analyzer, and I basically used this since the very start of my real estate investing career. And it's treated me well over the years. It's made it simple for me to just plug in a couple numbers and make a judgment on whether a property is going to be worth my time or not. And it's also made it easy for me to understand the numbers in the very beginning. It's also got another tab for a more detailed breakdown on a property, and you can use that when you're in your due diligence period and trying to work out all the numbers and make sure you're not missing anything. So the first property that I'm going to talk about is a 14 unit that I purchased way back in 2014. I originally purchased this as a 10 unit condo package. It was within a 14 unit building. It seemed very odd, but nonetheless, I acquired this property for $300,000. Over the next couple years, I acquired the remaining 4 units because it just didn't make sense for me to run this thing as a condominium and have to put up with running the HOA. Being as I was the majority owner in the property, I had to run this HOA every single year, but that's a whole nother story. I don't advise anyone get into managing an HOA. It's a real pain in the butt. So back to this property. All told, the 14 units cost me $420,000. That's roughly $30,000 a unit. And over time, I have put some money back into the property. Of course, there is loan pay down. There is increase in rents. All these things combined are why it's easier to become a millionaire than you might think. So let's take a look at the numbers and see how this breaks down. So as you remember, the purchase price on the property, the 14 units that I went over first in the beginning of the video, was $420,000. The gross rent at the time of purchase, they were renting about $495 a piece, and that was about $6,900 a month as far as the gross revenue. And over the course of a year, that is $83,160. So the vacancy and credit loss in my area, in my metro, is about 7%. It might even be a little bit less now, but we'll go ahead and use that for the purpose of this video. The total expenses at the time of purchase were about $30,000. They were probably well beyond that just simply because the property needed so many repairs. But this is saying that it is a 11 cap property. At the time of purchase, that's about right. So back when I started investing in about 14, 15, you could find a 10 cap, 11 cap, 12 cap property that needed some work done to it. I mean, a lot of work done. And you could find deals like that. You just can't do that anymore, unfortunately. So this being an 11 cap at the time of purchase actually makes sense. So this is showing the value at the time of purchase at an 8 cap would be about $591,000. So this is actually the value at an 8 cap. The value at my purchase price up here is an 11 cap. So if I were to fix this up at that time, got it down to an 8 cap, it would have been $591,000. And coincidentally, I had gotten offers for right about that range a couple years after I purchased it. So currently, as the property sits, the rents are averaging about $740 a month, and that is about $10,365 gross income every single month. And over the course of a year, that is $124,380. And we'll go ahead and leave that at a 7% as far as the vacancy and credit. And the expenses really haven't gone down. They were pretty much fixed. And I don't think I could do much to get them down any more than they already are. I basically only pay for the trash, which is about $110 a month. I pay for water, which is about $400 to $450 a month, my taxes and my insurance. My taxes are about $650 a month, and my insurance is about that as well. Now, I do not include any kind of property management simply because I self-manage. If you're going to download this 7-step deal analyzer, you're more than welcome to plug your numbers in for your management as well. And usually I just throw those numbers in with the vacancy and credit loss simply because they usually charge a percentage. So if they charge 10%, I'll just make this 17. But for the purposes of this video, and since I self-manage, I'm going to go ahead and leave it what it is. I am paying myself to manage the property. So this is showing the value currently at an ACAP at $1,070,000. Now, what really matters whenever we're going to be doing these numbers is how much the balance on my loan is. The balance on my loan currently is about $399,000, and it could be more. I could have pulled equity over the course of the last 9 years. I did it a couple times, but nonetheless, the balance is $399,000. So what we want to do is take the current value of the property, which is at an ACAP $1,070,000 minus the balance on the note, and that is going to be, let's just round it up to $400,000. And the equity that I have that is going towards my net worth is $670,000. Now, between the rent increases over the years, the debt pay down over the years, and the cap rate compression, the value of my property is higher. And this just happens over time with real estate. You can have low times in the market, you can have high times, but overall, the value of your property should be increasing over the years of your ownership. So this is one example of exactly how you gain so much wealth as a real estate investor. Now, a lot of the money that I had been making through cash flow every single month, every single year on this property, I would put a lot of that back into the property. But nonetheless, the property has still paid me. I haven't had to use any of my own funds. I've improved the property, lowered the cap rate, and increased the value. So that is $670,000. Now, the second property I'm going to talk about is a 12-unit complex that I purchased back in 2018. This complex was in need of a lot of work. I purchased it for $417,000, but I also got a bank loan for $130,000 to make repairs in the property. So all told, I'm in this property for $550,000. Now, similar to the first complex, I've had to put more money into the property over the years. There is loan pay down there, and the rents have gone up substantially since I purchased the property. So let's take a look at these numbers and see how this breaks down as well. So all in is about $550,000. The rent at my time of purchase that was told to me anyways by the previous owner was $7,300 a month, and that would be about $87,000 a year. That actually wasn't the case because most of the units were vacant, which I wasn't too upset with at the time because I had to go in and do a full renovation on the property. And whenever you're going to go in and do a full renovation on a multi-unit property, it's almost better to just have all of the units completely empty simply because it's a hassle dealing with the other tenants and they're not going to be up to your standards anyways. A lot of situations when it comes to these old properties that haven't had a lot done to them and they've just been neglected, they're not going to be the greatest tenant and you don't want them in there anyways. You want to be able to get them out of there, get in their unit, fix it up, increase the rents, and be done with it. So again, 7% on the vacancy and credit loss, and this property is less than a mile from my other property, so that is about right. Total operating expenses are about $30,000 as well. I pay basically the same things as I pay on the other one, except I actually bill water back on this property, and that takes out my water expense. So the value of this property with those rents, if I would have just left them where they're at an 8 cap, would have been $643,000. But typically when you go in and you do a renovation on a property, you increase rents and you increase the value of the property. So the current rents, as it sits today, 2023, are $120,000, which is roughly $10,034 a month. They average about $836 a month. I have 8 2-bedrooms there and 4 1-bedrooms. So 7% on the vacancy, $30,000 on the expenses. And the value of this property at an 8 cap with that income is $1,024,000. So let's take what I owe on the mortgage for this property, which is $420,000, and minus that off of the value at an 8 cap, $420,000, $604,000. So as you can see, between these 2 properties alone, I have over $1 million in equity, over $1 million in net worth. Between the rent increases, the cap rate compression, between the capital expenditures that I put into the property and the debt pay down, I have increased the value of these properties. They have increased the value of themselves just by being there, just by going with the natural flow of real estate, which is rent increases every single year and fluctuations in cap rate. I don't think cap rates will always be this low. I don't even think an 8 cap is actually that low. I probably could have sold this at a 6 cap last summer if I wanted to, but nonetheless, this shows you how you can build your wealth. And there are many ways to get into real estate investing. You don't always have to just have, hundreds of thousands of dollars to invest. You can do this in many different ways. I know many different people that have become millionaires in 4 years or less just from investing in real estate. And they all had full-time jobs, but they all had a passion to get themselves out of that situation, to not work for anyone else anymore. I remember what it was like before I started investing in real estate. I was sick and tired of waking up at 5 a.m. every morning, having to work weekends, and just not having anything to show for it at the end of the week. So if you're passionate about real estate investing, or you want to try to learn about real estate investing to get yourself out of this situation so you can afford to live in this inflated economic time, please leave it in the comments down below. And I hope you enjoyed this video. And as you remember, I said I would leave the 7-step deal analyzer in the description down below as well. If you've got any questions about using that, leave it in the comments down below as well. Thanks for watching.